Welcome to Taiwan Talks. I'm Betty Chen. China's state-run Xinhua News Agency recently reported that President Xi Jinping, in a rare admission during a meeting with non-party members, acknowledged some difficulties and problems in China's current economic development, but emphasized that these challenges can be overcome with effort. This statement has drawn significant attention. Additionally, the Chinese government has recently invested a substantial $47 billion to develop the semiconductor industry, hoping to regain its competitive edge. With Xi's confidence and the government's financial injection, can China's economy achieve this year's 5% GDP growth target? Joining us today are Marco Mezger, Neumonda Executive Vice President and Chief Operating Officer, and Raymond Sung, Prospect Foundation Vice President. A warm welcome to both of you on the show. Thank you for joining us.
Thank you.
Xi Jinping has made a rare admission that China's current economic development is facing some difficulties and problems, which he describes as issues arising from development and transformation. So let's start with today's talk. I would like to direct my first question to Raymond. Why do you think that Xi chose this moment to express or to share this kind of information, saying that, there might be, do you think that this might be an economic warning and any signs in China?
Firstly, the recent mission of the insufficient economic policy seems to suggest that there's a shift of the central government's economic direction from in the early of 2024, when Xi Jinping emphasized to strengthening the manufacturing capabilities of China and try to resuscitate the export market. And because over the last 6 months or so, those measures didn't work, that's very clear, because the manufacturing figures have been decreasing for the consecutive third month, and the export actually down from the previous figures to about 900 billion US dollars. So those measures don't work, and so the shifts is that they'll be more focusing on resuscitating the consumptions domestically, and especially among the normal people to boost their confidence to spend more. So firstly, it might suggest a signaling a major shift of Xi Jinping's economic policy. The second is about the external view perspective about the Chinese economy, because much emphasis or hope was laid on the result of the Third Plenum congressional of the CCP, but the market responses to that was disappointment, because the still same story goes on without much high noble rhetoric, without concrete measures. And then those message is still emphasizing about state-directed economy and painting a beautiful future about for new high-quality production, all those things. And so the responses to that is very quick. So that prompted the admission from the very top leader of China.
And this is something extremely rare, right, for Xi or for Chinese leaders to acknowledge that maybe they're not doing so well. So against this backdrop, we understand that the Chinese stock market is not doing very well. And Bloomberg even reports that in order to conceal the ongoing withdrawal of foreign capital from A shares, China will stop disclosing daily foreign investment data starting from August 19. So Marco, you are an investor and also an entrepreneur. So what are your thoughts on this kind of exodus of foreign capital from China, and what will be the value of the Chinese market to foreign investors?
Well, I think it's a recalibration what is happening right now, right? If you look how the last couple of decades, the money was basically floating into China, using it as the manufacturing hub for the world. Everybody almost put all their eggs in one basket. I think they experienced during the COVID time that this probably was not a very good idea. So putting the politics aside, from a pure business and operation perspective, it is very important that we have like a more balanced supply chain. And that's kind of what is happening. I think a lot of this money, which before was going to China, is now redirected in Asia, for example, to Southeast Asia, right? It's private investment from companies. Now, you also know that there are several subsidies, subsidy programs in the US, in Europe, which also tries to attract companies to go there. But make no mistake, if you look at the sheer volume of manufacturing capabilities, even right now, China is still extremely dominant in that segment, right? Because the money has been coming in for such a long time, and it's still a huge market where the companies also want to address. So if you see a drop in the foreign direct investment, you see it drastically, I also see these numbers, is because the money is moving into other areas, electronic production, like Malaysia, Vietnam, India. So these are cities, especially for electronic and, let's say, technology production, what is moving there.
So you're talking about recalibration or even diversification or even more like a rebalance for these companies to redirect their funds.
And they have to do this. They have to do this because I think we were speaking in the beginning, I think, Mr. Vice President, you mentioned that, for example, the manufacturing didn't work out as originally kind of planned. But this is also because the global economy is a little bit sluggish, right? So if we see it's not really, there's a very high demand, then different countries are also putting into measures that, for example, the cheap produced products from China cannot enter so easily. For example, Europe, Germany has a big automotive industry. They're a little bit in a dilemma because China is also a huge market for them. But on the other side, when they are making now these tariffs, what they are blocking the EV companies, where China at the moment is in the lead, this will have some implications. So the world has gotten much more complicated from a business point of view, especially when we talk later about semiconductor. It's already highly, highly complex. Now you have another layer of consideration and interference where these companies are basically there to provide a return on investment for their investors, have to deal with very short-term new policies implemented by USA, European Union, you name it. And I think that probably also is a little bit behind this drop in the foreign direct investments, because everybody is talking about a China plus one. Okay, so what's the plus one, right? That's what the US called friendshoring. So you divest some money and you move it in other areas. That's why I said in the beginning, recalibration, or I think you managed it also like a reshuffling of the investment.
Right. Thank you for sharing with us the insights from the business perspective. And now I'd like to move back to the policy side. So my question will be for Raymond. So you mentioned that there was some disappointment after the third plenary session of the CCP. And there was a lengthy article praising Xi Jinping, and it was titled Xi Jinping, the Reformer. It was published by Xinhua News Agency, but shortly after its release, it was taken down, which is also very rare. So how do you interpret this removal of this praising article?
Firstly, let us presume that every article publishing that kind of prominent newspaper must have some backing from the very top.
Yes.
No matter the central of the propaganda bureau or even to the top leader Xi Jinping. And that piece you mentioned is called Xi Jinping, a great reformer to the caliber of Deng Xiaoping, which is initiator of China's westernward and opening policy. And Xi Jinping was called the great reformer, and even in his genes has the reformers. And it will soon disappear from all the public official channels, maybe because I think putting too much emphasis on an individual, the top leader nonetheless, but putting so much emphasis on himself and his character and his policies as well. Maybe not really beneficial to the CCP at this moment of time when, especially domestically, there's huge dissatisfaction against the Xi Jinping's direction and huge distrust of the CCP's policy guidance and huge doubts about the kind of decision-making of without proper expert input, but on the hand of a single the top leader who is not an economic expert. All sorts of doubts and all sorts of difficulties experienced by the jobless people, by the newly graduates, all sorts of that make that high praise for the top leader a very, very contrast, big contrast of even to the matter of laughing stock of ridicule. So the negative implication was soon found out, and that was soon taken down.
So we talked about some figures. Data from China's National Bureau of Statistics shows a GDP growth rate of 5.3% in the first quarter and 4.7% in the second quarter, resulting in 5% growth for the first half of the year. The BBC notes that achieving 5% growth in the second half of the year will be challenging, requiring policy support due to last year's very high growth base. So now let's move on. We understand that in a recent Politburo meeting, Xi Jinping has emphasized expanding the domestic demand and announced $41.5 billion in ultra-long-term special bonds to regulate the market. So what's your thoughts on Xi Jinping's economic policies? And also, according to Bloomberg, it seems that Xi Jinping is considered the chief economist, so he sometimes just ignores the calls from the experts asking for large-scale market stimulus. Do you think that the economic policies proposed by Xi Jinping is actually viable? Maybe we start with Marco.
As we mentioned, the challenges, what we see in China is that the people who have no jobs, who lost jobs, right? People who lost their properties or who lost values in properties. And I think that's what Mr. Vice President mentioned before. The normal people don't see that any new policies came into place that would stimulate this, like giving like some benefits, for the houses, giving some support for the companies who file bankruptcy and help these people. Because when you think about the housing prices, which before was financing all the growth of China, and then this money was used to invest in certain industries, this is a major impact on this. But if you look at the GDP, frankly speaking, from my point of view, a GDP of 4.7 or 5% in many other Western countries would be still pretty good.
Still very good.
So the point is just like China has had a remarkable run over so many decades. And I think it's pretty normal in every economy, you have some type of a correction. The challenge, I think, what is in China happening right now, everything comes at once. So this means like all the challenges, when we talk about sanctions, tariffs, the semiconductor industry, restrictions to get certain products, housing prices down, everything has to be dealt at once in such a big country. And so I believe that people need to see some actions. And these actions have not been seen yet. So I don't think that there's any stimulus, who would bring this GDP up, or where the people are waiting to see something to happen.
Thank you, Marco. Raymond, what do you think about Xi's economic policies?
Actually, the consumption, domestic consumption percentage for the whole economy is about 40%. And normally in the Western country, it's about 70%. So there's a large gap, and the low, very, very low consumers' confidence to be boosted. But the putting money in that, at least, is better than, for example, previously putting money into the real estate debts problem. That's a huge, endless gap. There's no hope to really rescue those. So the structure problem of the China, as Marco just pointed out, is multifaceted. It's in every aspect. Maybe it's going to the every aspect of a middle income debt trap. And but on top of that, the policy uncertainty is also a problem to be addressed. For example, to attract foreign direct investment, you need to give very, very clear guidance to the foreign investors. And you need to show the friendly environment for attracting foreign investment. But at the same time, you push forward, for example, anti-espionage law and have a large crackdown on the, for example, confidence investigation firms, and also for boosting the real estate problem. Do you need to rescue those, or you need to abandon those? And about the long-term problem of local governments, that's also a long-term problem. So all those added problems actually has been very structural and for a long term. But the problem is that the top government and the top leader of the CCP has never really got down to the business, really to solve those problems one by one.
So we talk about the policy side, and now I think as Marco mentioned, we would like to talk about the semiconductor industry. So China has launched its largest semiconductor investment fund, the National Integrated Circuit Fund Phase 3, with a 47 billion investment. So given the first and the second phases of the fund were established in 2014 and 2019, what will be their outcomes? How do you see that in the third phase? How will that be different from the first and the second phases? And do you think that it can really work? Marco?
Yeah, I think first of all, it's a learning curve, right? So when they initially started with this, with the first big fund, the companies who received it was more like on the manufacturing slides, like companies like SMIC, other companies who were building fabs. And it did not work out always so positive, right? So of course, they lost money. There was also some fraud about this. The government learned about that, and there was the second one, the second big fund. The second big fund was more focusing on equipment, on technology, building up semiconductor manufacturing equipment, which you need to equip the fabs. And now the third big fund, what is also very different there is that the government included also financial institutions, government-backed financial institutions, who also invest in this fund. And they are looking into critical future technologies. They are looking, for example, for design software, EDA software, which is used basically to design chips. Big companies in the world are Cadence, Synopsys. They are both kind of American companies. And there's always the US also highlighting this, that this also might be a way for them, you know, to sanction this or to not provide them the technology anymore. So this investment now is going into these kind of segments where they want to be kind of self-sufficient. They want to be able to have their own kind of design software. They want to be able to create their own HBM, which is like a high bandwidth memory, which is used for artificial intelligence, for AI. Where at the moment it is very difficult for China to get the latest and greatest chips, which are produced, for example, for NVIDIA. They only can sell like limited chips of this, so they are scaled down in order that China can receive it. So I think this third big fund is really looking very much ahead on technologies which come in the future, and that China is able to have their own technology, because they have seen now, because of the sanctions, that they can be blocked out of specific technology. And some of the technology will be very, very difficult for them, I would say almost impossible to copy it. And this is like the EUV technology, you maybe have heard from ASML.
Marco talked about the important sanction from the West on China in terms of acquiring the important semiconductor equipment or chips. Raymond, what's your take on this? How do you think that this kind of sanction can impact China's future development?
I think the consecutive U.S. administration leading the way to really make that network of export ban really, really seamless, trying to prevent China from getting the latest cutting-edge technology in terms of design and production, in terms of really high-level advanced chips. And those really causing problems as we see, like the incident of Huawei's cell phone. And of course, they try to portray that they still could make some competitive edge and make the latest cell phone, but it proves to be not really to the highest standards. And so the technology ban really, and it's applied to across the jurisdictions for any companies using US technology to a certain, above a certain percent will be banned to be trading with China. And those banned are expected to be continued no matter who will be the next administration. And of course, we also see the Taiwan's semiconductor manufacturer are complying with the export ban. So the technology competition between the great powers will be expected to continue. That will really cause a serious problem for China. So that's the way why Marco mentioned that China really want to break through that by devising its own advances of technological.
So definitely they will try their own way, but just like Marco said, some of the advanced technologies, they have been in existence for a long time, possessed by some really advanced or leading companies, and it is not easy for China to just replicate these technologies overnight, right?
Yes, but Betty, one thing you should consider or remember also, if we are looking at the semiconductor market, there is a huge chunk of the business which is basically called major process nodes. So this is 20 nanometer and above. And if you look, for example, at the financial reports from some of these semiconductor manufacturing companies, a lot of these companies, including ASML, more than 50% of their revenue is still in China. So these are products, DUV technology, which they still can ship, or they could ship for a very long time. And so China is in a position where they are able to win the major node market. I don't think that another country without subsidies will be able to be price competitive, because this is older technology, is written off. If you look at TSMC, most of their revenue, they make 2, 3, 5 nanometer, almost no competition, right? There's Intel, there's Samsung, but frankly speaking, I love TSMC, it's the master of execution. They have the track record is very, very difficult for other companies, and the only ones who can do this is Intel and Samsung. I don't see like a China company like SMIC or whatever to come even close there. But I think for the major process node, a lot of governments, a lot of companies need to look how they will deal with this in the future, because there's a lot of capacity built up. And the majority based on volume, not on US dollar, but based on volume is definitely on the major process nodes, where they will be in the lead definitely in the next 2 years, I would say.
Definitely,
There's no
because
question.
China's market is so big, right? Just like the numbers that you have shared with us. So definitely we still need to keep an eye on the future development.
Yep.
So moving on, a Bank of America report shows that China's low-end manufacturing sales have dropped significantly because most of the orders, just like what we have talked about, maybe because of the diversification policies, have moved to, say, Vietnam or Indonesia or some other Southeast Asian countries. For example, whether it's apparel or footwear or furniture, its total export has dropped significantly. So what do you think of China's internal challenges, like what we talk about, the, housing prices or the low demand for the domestic market, and also the external pressure, like the foreign investment? How do you see the overall challenges faced by China? Marco.
Well, I think for the manufacturing, as I mentioned earlier, so you will always have like manufacturing capabilities in China for China market. When you look into other market segments, so India is a huge population market also. That's why even Foxconn is moving this production site to produce there. So I know, for example, also for Sony is keeping production in China, but only for the cameras they are selling in China. So for the rest, they move to Southeast Asia. So it's a China plus one, what they are doing. If you look at the consumer in China, so I think what has changed probably in previous years, that China is not only looking to the Western brands so strong anymore. There have been coming also like China local brands coming up, you know, which have a brand name, which are more competitive in pricing. And people are also using these brands. I mean, the luxury brands are suffering also in China. They are not going up like before. And there's a little bit of a change in the consumer habits, you know. I think also it's a little bit driven of all the discussions we have right now, right? Where we have the geopolitics, we have sanctions, we have tariffs, people struggling with their private life. Then you have easy platforms like, I think in the Western world they call it Temu, and I think it's Pinduoduo in China, where you buy everything direct for very, very low price. So this is why these companies are so strong at the moment, because, you know, it's like a very low-end cost products, and people buying this, because people don't know really, okay, where does it go? Where do I have my job next week, right? Because manufacturing is employing like a huge portion of the population. And if you look in the stock market, for example, the Star Exchange in Shanghai, wow, I mean, 2 years ago, you have seen companies filing IPO all the time. Now it's very, very difficult to basically file IPO, because there also has been a lot of fraud challenges, and the government want to hold these people accountable, which I think is good. But a lot of investors lost trust And so now they are much more selective who they allow to do an IPO, because this means a lot of money, especially in the stock exchange.
So Raymond, how do you see the long-term economic development of China? Are you optimistic or pessimistic?
I think some structural aspects need to really be seriously tackled. Firstly, the reform. The reform really means from a state-directed economy shifted to a market-oriented economy, which we haven't seen much progress in China. For example, nothing is more prominent in terms of favoring state-owned enterprises than the private firms. And for really an economy to boost, you need to make the incentive for the creative and really free thinking enterprises. So that's the first one. The second one is about the current increasingly intense geopolitical situation. Much of it is contributed from the Chinese side, really to incite to cause a sense of uneasiness, no matter in terms of economic policy, like the concern about overcapacity, about dumping mass-produced products into the Western and European market, or the more on the security side about Chinese rise. What does it mean for its neighbors and for the global international orders? The third one is about Xi Jinping's putting prominent emphasis on his own continuation of consolidating his power and national security over economic developments. Those structural problems need to be shifted and quickly, and so that the Chinese market will be more attractive to investors.
I'm afraid that's all the time we have for today, but thank you so much for sharing with us your insights from the policy and also from the industry perspectives. Thank you very much. If you like our show, please search for us on YouTube, give us a thumbs up, and hit subscribe to our channel. Thank you for watching our show today. Stay safe and see you next time.